Hello everybody, I'm Mark Fleetwood and I trade crypto successfully. I am starting this channel to share with you my knowledge and share trading strategies with you so that you can learn and you can put these together and make generational wealth for yourself. I want to trade live. I will be trading live at least 3 days a week because I think talk is cheap. I think posting charts and posting wins and you did this and you did that, it's too easy. Anybody can do it. Anybody can go back in hindsight and post a long or a short and say that they hit it. I'm going to trade live with you. I'm going to put my money where my mouth is. I'm going to start a fully funded account. We're going to start a prop firm account and see if we can get funding trading only cryptocurrencies. And I'm going to do it live, at least 3 days a week of streaming live. And then on the weekends, I'm going to do at least one weekend video, preferably close to the weekly close on this Sunday evening. This is a little bit later tonight than I wanted to start. Had some technical difficulties getting started up, some mic things and other things that went wrong, but here we are. My weekly will be large macro, DCAing into certain projects, finding those golden pockets. There's areas to start getting into where you can start accumulating really low and hold for the majority of the bull run and try to get that 80%. Try to get 80% of that run and make multiple times your money and start making that generational wealth. That's what I'm here for. I want everybody to start making generational wealth, and crypto, I believe, is the best vehicle for that to happen. So with all that out of the way, we're going to hop into our first chart, my first technical analysis video, and we're looking at ADA. I don't currently have ADA, but I will be buying some today, and I'm going to tell you exactly why. One of the reasons why I like the ADA chart is because there's a lot of history there. This is the Binance chart, and we go way back to April of 2018. And in 2018, we started the bear market after the 2017, super cycle. Well, not super cycle, but we had a blow off top in 2017. Bitcoin went up to almost 20K. Alts went crazy. Money was flowing in, and then we had our first really big bear cycle, or the first mainstream bear cycle, where a lot of people knew that, holy crap, crypto coins, these altcoins dropped 90%, 95%, but they're still here. ADA is still here, and it's still in the top 15. But one of the concepts I use, and I love smart money concepts, I love ICT concepts. I think he's a brilliant trader, a little bit of an odd guy, but a brilliant trader, and his concepts are great, is a fair value gap. And what I want to show you here is this fair value gap that we had a wick down to here, the top of this gap, and then a wick up to here, and this long bodied weekly candle of straight sell pressure. And what this means is that there was an imbalance in the order books. Selling sold down through this area, buyers never got back all the way through it, so there's an imbalance here, and price wants to balance. Market makers want to have balanced price. We want to have efficient markets, so price is going to want to come back and fill this area. Now on a weekly chart, this could take months, a year, who knows, but it will likely fill, and it will likely act as a resistance, as it did here. Resistance, pullback, and then once it got above that, it just shot off, and we were in full-blown bull market, and we know the history of what happened in 2021. Now, why is this important here? Because we have our market, and we have market structure. So we had a high, then we had our lower low, lower high, lower low, lower high, equal low, not quite a lower low, lower high, lower low. Let's just say that this was our most recent lower high, because this one, if this low doesn't break this one, then this is all just consolidation range. This is all in consolidation. So this was the most recent high before this low took it, and then we broke structure. We changed, we had a shift. We made our first higher high. Our first higher high hit resistance at this fair value gap, and this was our first local top. This was the first top of the 2020-2021 bull cycle, and if you're an Elliott wave person, this might be your one wave on the macro, two wave down here consolidated for a while, then your three wave just went freaking bananas. Your three wave went wild, and three waves are typically the most explosive and the biggest waves of any cycle, especially on macro. And you see that even once we broke out of this consolidation, and this was our golden pocket to buy. This was like a golden area to buy in here, where it came back down and was consolidating. And if you take a Fibonacci retracement level from the bottom to this first peak, you see we're sitting right around that 50%. We wicked almost down to the 62% retrace, but all this area here around 50% is all generational wealth opportunities to buy, because if you buy that and you hold it for 6 to 8 months, you're making thousands of percent. You're making 30 times your money off of this. And it just, this chart just looks wild. You almost want to have to go logarithmic to even make the chart make sense. But if you buy anywhere in this pocket and you just hold, until here, you're at 2,987%. If you made it to the second run, to the summer of 21, to August, September, you're over 3,500% up to 3,700%. Now you're not going to get that whole move. I mean, hopefully you do, and if you do, awesome, congratulations. But anywhere in this area, you're golden. You've made a ton of money. Start cycling out. You start pulling out in chunks. You start bringing chunks of your money out, because you don't want to hold through an 80% retrace. And I don't care what any fanboy of any coin says, do not get emotionally attached. If you're a Link Marine and you never sell diamond hands, stay away from those people. Diamond hands is just stupid. It's just stupid. And I'm going to get off of that rant, but you never want to hold through an 80-90% retrace. Why would you do that? It makes no sense at all. But all this area back here, why is it important? Why am I even bringing that up? Well, because here we've got a fair value gap that, while we did wick into it already, it is currently acting as resistance. We have our lower low, we're making lower highs, lower low, lower high, lower low, lower high, lower low, lower high, and then we make higher highs. This is our first wave up. This is our one wave. And then we are in the two wave right now as we speak. And I believe we have bottomed the two wave, and I believe we are in a position of consolidation. Now, the last cycle consolidated for about 12 weeks before blowing back through, and we are in the 8th week right now. So it's not going to be exact, but it might rhyme. We might get 8 weeks. It might blow up this week. It might go 12 weeks. We might have 4 more weeks of consolidation where we can add in, and we can DCA, we can buy more, we can add to our positions. And again, honestly, for me, I plan to be honest. I'm a bit of a degenerate, so I'm going to be buying in on this with a little bit of leverage. Nothing crazy. 3x, 5x, probably. Go high end. Let's say we go 5x, right? So at 5x, you've got almost 20% loss before you get liquidated. Now, if I buy in at 5x and we drop 10%, I'm going to probably double that up with 5x and add more in and drop my liquidation price down, because I'm not stop lossing this. I'm not going to stop loss, and I'm not going to sell this position, because I know where we're at. I know we're in a position to get to the next leg up. I know that we're either, at worst case scenario, we're going to get above $1 to $1.60 or $1.80. We might hit this fair value gap here and get some resistance. But the best case scenario is, once this starts to move and once this starts to really take off, we just go straight to breaking the all-time high, and we do that before the end of 2024. Before the end of this year, by the fall or winter of this year, we're up around $3.10, and all season is in full swing, and we're waiting to see where our 4-wave correction and then 5-wave peak is going to be, and we're looking to be out of this market by the spring of 2025. And that's almost a year of holding, but that could potentially be from here. And again, this is not financial advice. I'm not telling you what to do. I'm just telling you what I'm looking to do. If that's a 5x or almost 6x to all-time high, right? 596%. So almost 6x on 5x leverage is 30x. 6 times 5, yes, 30. Had to make sure my math was mathing. 30x in a year or 9 months, and I'm out, and I'm out comfortably. I don't care. I don't care if it doubles up again. I made 30 freaking X. I don't care. I will go out at this all-time high and be fine. And because I'm DCAing in now, I'm not locked in with where I can't add other positions to other tokens or other coins, because you're going to be able to look around and you're going to be able to find other charts that look just like this. You're going to find other opportunities that look like this, and you can add into whichever ones you please. Do your own thing. Do your own research. Do your own thing. Do your own analysis. But this here, this is just way too similar. This is just way too close. And we flipped market structure. That's the most important thing. The most important part of this is we flip market structure. And if you go and look at any trading channel and they talk about these different strategies, look at first retrace strategies. Look at strategies that talk about buying the first retrace or selling the first retrace. It is one of the most talked about, it's one of the most lucrative and one of the safest trading strategies, because you've flipped the market. You've already flipped structure. Now you're just getting the first pullback or the first retrace, wherever they call it, and that's where you get your entry. And that's where we're at right now. That's where we're at. The first retrace after a new higher high. And guys, we're going into bull territory. It's going to happen. Bull market's coming. So I hope you enjoyed this video. I hope I earned a subscription from you. Maybe you'll be my first, and I will be forever grateful. Thank you very much for watching. Take care. I don't have an exit phrase yet. I gotta work on that. I gotta work on an exit phrase. Damn it.